Investment basics for business owners. So you're a business owner who's been focusing on growing and scaling your business, and maybe your personal wealth has gone by the wayside a little bit. You want to know how to systemize the way that you take your business profit and you turn it into personal wealth. You're not quite sure where to start. Well, there's a lot of complexity in this, but I'm going to simplify it to make it super easy for you to get started after this video. Now, I just want to preface by saying this is not financial advice. This is purely educational information. So if you're unsure, you want to get some help, make sure that you reach out to a financial advisor. It's something we can help you with if you'd like some help. So let's run through the details. Now, as a business owner, you're a pretty smart cat, right? And you're focused primarily on manufacturing wealth because you're actively involved in your business and your business is a wealth creation vehicle. But we've got to draw the line somewhere between active income and passive wealth. And this is where many business owners go astray. They try and actively manage their portfolio. They try and get too sexy with it. They're trying to pick stocks. They're trying to trade the market, to do all of this kind of so-called cool stuff. We don't need to get that sexy with it, guys. We're going to keep it really, really simple. I do this exact same strategy myself. So the simplest way for you to systemize your investments is to utilize a low-cost index fund on some sort of trading platform. Now, sure, you can go to a brokerage account with, say, a CMC Markets or a CommSec Securities or an E-Trade or something like that. However, you've got to realize that most of these platforms cannot be automated. They require you to put money into a cash account in this brokerage account and then go and place the trades. There's a process around this. I can show you exactly how to do that. But the challenge is this is manual. And for many of my busy business clients, they can set up an automated transfer into the brokerage cash account, but actually having the mechanism to go in and trade every single month, although it doesn't take that much time, it is a manual process. In some cases, they sometimes forget, the cash accumulates in there, and it doesn't do them any favors. So there's a number of platforms that we can set up that allow you to completely automate this process. So you can have a look at Vanguard Direct Account. You can have a look at other kind of micro-investing apps like Raise and Spaceship. Now, all of these are basically an app which allow you to put money into a cash account, but also automatically sweep money from that cash account into a portfolio of your choosing. So what you need to do is go and do a little bit of research, find the account that's right for you. I've tried all of them. There's some pros and cons to each, which I'll cover in another video. And then what you need to do is then choose the investment option that aligns with you. Now, what we want to try and understand is what is your kind of tolerance for risk. And we've got to realize that investment risk is typically measured by volatility and your ability to stomach that volatility. So for myself, I'm a high risk investor. So my portfolio is in high growth, which basically means 90 to 95% of my investment assets are in growth assets, in shares and property. Now, I'd probably say across our client base, the average is what we call a balanced investor, so about a 70% growth to 30% defensive, but you've got to try and make a choice that's right for you. We believe in diversified index funds when you're getting started, which basically allows us to get diversification across the entire market. So in all of these platforms, you can choose a diversified fund. In Raise, they've got a diversified option. Spaceship, they've got diversified options. In Vanguard, they've got some really great diversified options. For example, you might choose something like the Vanguard Diversified Growth Index Fund or the Vanguard Diversified High Growth Index Fund. You select that investment, and then you'll decide how much you want to direct debit into those accounts on a monthly basis. The good news about the micro-investing apps is you can actually do weekly if you wish. And what this allows us to do is to implement dollar cost averaging, because this is where I see so many business owners go awry. They're trying to time the market, be sexy with trying to get money in at the right time, as opposed to just setting up a direct debit and investing rain, hail, or shine. Doesn't matter what the market is doing. We want to automate this to set a foundation and focusing on just increasing that direct debit on a regular basis. So let's say, for example, you decide today that you can afford $500 a month. Perfect. We'll set that up. And what I want you to do is to go and set a recurring reminder once a quarter. So in 90 days' time, I want you to set a reminder for yourself to say, review your direct debit. And if you can, bump it a little bit. Even if it goes to $550, even if it goes to $600, whatever the number is, bump it. And what this is going to allow you to do is to incrementally increase your contribution into that investment over time. Now, the important principle here is that we need to start creating that money muscle memory for a couple of things. One, we want to create the money muscle memory of breaking the ice and actually getting money into the market. That's why we start with a relatively small amount. Two, we want to create the money muscle memory of the regular and repeated contributions without fail. We don't turn this off. We try our best to never turn this off, because if we start turning it off and playing around with how much we contribute, we are creating these habits that this is not a long-term thing. This is a transient, an experiment. We want to make sure that we can create these habits that are presupposed for the long term. And then the third money muscle memory we're trying to create is that we never pull money out of the investment portfolio unless it is for its intended purpose. So if your plan is to build this for creating financial freedom, we don't touch it until we've got enough wealth to be financially free. If you're doing this in order to save up a deposit for your next property, then great. Don't pull it out until you've got enough deposit for your next property. So that's the third money muscle memory we're trying to create. And the fourth money muscle memory we're trying to create is the mechanism for increasing that contribution incrementally over time, disconnected from market performance. I don't care if Uncle Bill is telling you that the market's at its all-time highs and the market is inevitably going to have a big crash. It does not matter. We need to make sure that we stick the course, because the challenge is that people who are tactical with markets often miss the best days of performance, which can have a drastic impact in their long-term performance. So we need to be participating in the market at all times. So if you implement this strategy and you follow these principles, then it's a really simple way for you to start accumulating wealth, and it's basically effortless once you've set it up. So let me know your thoughts, guys. Any questions, hit me up in the comments. We'll catch you soon.